Bitcoin and crypto prices seem to be recovering and entered an upward trend in recent weeks. Bitcoin has already reached its pre-FTX scandal levels and continues to show upward momentum. But is this going to last? Is this going to keep going? Are we already out of the crypto bottom? And more importantly, where are we headed?
Here's an interesting stat. Every halving adds a zero, meaning it increases the market cap of the Bitcoin asset by tenfold. So we went from 1 to 10 in the first halving, then we went from 10 to 100, went from 100 to 1,000, went to 10,000 in the last one. And I think, January, February next year, we go to the 100K and we'll surpass that, because then the next one after that, brace yourselves, right, is 1 million.
Today, Mark Yusko, founder and chief investment officer of Morgan Creek Investments, shares his insights about the global macroeconomic, the future direction of cryptos, and the economic outlook for 2023.
So years ago, there used to be something called the January effect, where people would sell their losers in December for the tax loss.
Right.
They had to wait 30 days to buy them back. So in January, all the stuff that was horrible the year before did really, really well. And it was known as the January effect. And it was really small cap and micro cap names by and large. And that's where the excess returns for the year came from. Well, they changed the tax laws a number of years ago that made mutual funds sell by October 31st, not December 31st. And so the January effect got shifted to November. So if you look in the middle of November, just about every year, you have this 2-3 week period where the crappiest companies, right, the things that were just horrible all year, did really well. And you didn't get the January effect. Well, this year, last year was so bad. Like everything was down. Stocks were down, bonds were down, small cap, large cap, international, emerging markets, everything was down. Crypto. So the regular folks actually did some tax loss selling.
Many factors affect crypto price level movements, such as the number of buyers and sellers, market anticipations, sentiments, and media. But one overlooked and often neglected factor is the January effect. That is the increase in crypto prices with the beginning of the new year in January. This January effect was primarily influenced by the tax laws. And if you look at the crypto charts, especially Bitcoin, you will see that the prices rallied fast in January. Yet, as Mark pointed out, they changed the tax laws, and there was no tax benefit in selling crypto around December and buying them back in January. And all markets have been going downhill and was having a really bad time. So this crypto rally of January 2023 was definitely not caused by the January effect. So, are we headed for another bottom, or will we continue to go up? Let's hear Mark's opinion on that.
I still believe we're in crypto spring. Crypto winter's over. We got through Hurricane Sam, which I didn't anticipate. And that's where we went. We were at kind of 18,000, and that's what I thought was the bottom. And then we had Hurricane Sam that took us down to 15. And now, we got back to 18. That to me is spring. Spring is choppy, ugly, not really up and to the right. Up and to the right is summer. Summer's still 3, 4, 5 months off in anticipation of the halving. But, so could we have a retracement back to 18 before we head? We're not. There are a lot of people saying we're going to be new all-time highs this year. Possible.
That's interesting.
Definitely likely in early 24.
For crypto lovers, it's good news coming from Mark. He is betting for a crypto summer. Now, in the last year, Mark predicted that the 18,000 level was the crypto bottom. However, right after that, Bitcoin reached an all-time low of 15,000, shattering all the expert predictions at the time. Now, nobody saw the Hurricane Sam coming. The FTX scandal took the whole crypto industry by surprise, so we can let that pass. But when you say that we are going to reach the all-time crypto highs in early 2024, that's a wild claim. Here, Mark explains the reasoning behind his prediction. Let's hear it.
If Barry and Grayscale are forced to liquidate GBTC, which, there's a bunch of shareholders that are kind of coming together to try to force that issue, right? Closed-end funds can get taken over by their shareholders and can be forced to liquidate. Now, the bar is a little higher with GBTC, as I understand it, with the structure. Like a lot of closed-end funds, you only need about 10, 11% of shareholders to get a special vote. I think the number here is higher than that, maybe even as high as 50. I don't know that number exactly. But even so, if, and that's capital I, capital F, if GBTC Trust was forced to close and we basically sold 10 billion, now probably closer to 11 or 12 billion dollars of BTC, that's about 10% of available circulating supply, right? Not total supply, but remember, 65, 70% of Bitcoin hasn't moved in 3 years. It's not gonna move. So the free float is what we have to talk about. And GBTC owns, as I understand it, about 10% of the free float.
While many crypto traders are occupied with price actions, media, and macroeconomic indicators, they lose attention to one of the most fundamental factors of deciding the price level of any asset. That is, the supply and demand. And if you paid attention to the news recently, as Mark has done here, you'd know that there are all sorts of speculation about the possibility of liquidation of the Grayscale Bitcoin Trust, the largest individual holder of Bitcoin in the market. If GBTC Fund was forced to close down and sell all of its Bitcoin holdings, that is going to increase the available free float in the Bitcoin market drastically. If you are confused about what the free float is, it refers to the number of Bitcoins that are available to trade in the market. A sharp increase in the Bitcoin supply can pull the price levels down significantly. And as Mark mentioned, about 70% of Bitcoin has not moved in the past few years. So the liquidation of 10 to 12 billions of dollars of Bitcoin can pose a significant threat to the upward momentum we see in the market. But if such a massive liquidation happens, how bad will it be?
If that were liquidated, everyone says, "Oh, it'd be horrible. It'd be straight down." Well, remember, for every seller, there's a buyer, and I think there's a lot of money waiting to get back in, and so I think it would be bad short term, but I don't think it'd be a disaster. And I think we could handle it. Now, I also think Barry has said you can take GBTC when you pry it from my cold, dead hands. Okay, that's pretty strong. So I don't think it's going to get liquidated. So if it doesn't get liquidated, I think we're in pretty good shape.
As a smart investor, you should never let sentiments and naysayers hit your nerves. After all, every seller has a buyer, and there are many investors who are willing to enter the market. So in any case, it won't be as bad as some try to paint it. And guess what? No one is still certain about the liquidation of GBTC, and there's a good chance that it might not happen at all. However, the Morgan Creek CEO is not completely ruling out the possibility of a retracement and a downward trend. After all, who knows what surprises the cryptos are holding?
I think this is a short squeeze. I think we'll have a retracement, a pullback. I think it's still positive, and short of a liquidation of GBTC, I think we are in the beginnings of the accumulation phase again, right? In the 4-year cycle, we have crypto winter, spring, summer, and fall. We were in winter, now we're in spring. Summer's still coming. And summer is when you get the big parabolic move, and then fall, you get the kind of consolidation and heading back into winter. So I think all that is good. The one thing that I do struggle a little bit with is the technicals versus the fundamentals. So a lot of people are looking at technicals, and yeah, the technicals look good. You got a rising, 50-day breaking through the declining 200-day. That's a big positive. We got a momentum thrust out of the bottom, but that oversold RSI is troubling, right? Our thing about RSI, it doesn't have any plateaus, right? Never, ever, ever does it go up into the 70s and stay there. It goes up higher than you think, and then it goes back down. It's a oscillating pattern for a reason.
Mark's view is that the crypto prices are currently in the consolidation stage. However, as he pointed out, the RSI indicator being oversold is definitely something everyone needs to look out for. Why? Because it never stays the same, and once it hits a maximum, it will always come back down. So, what's your take on this? Do you agree with Mark Yusko, or do you have something else on your mind? Let us know in the comments down below. Don't forget to hit that subscribe button, and I'll be seeing you in the next one.